Welcome to the Trad Dads podcast, where we examine cultural and political issues through the lens of traditional thought. Recently on one of my YouTube video comment sections, I got a request to discuss a video debate between a couple of, famous YouTubers. And the debate is about 3 hours long, but I will provide a link to that in addition to the timestamp that my listener requested that I start listening. And the debate that they were having was kind of a discussion of some big macroeconomic issues that are, that are relevant all the time. But I struggled when I saw that comment. I struggled to kind of figure out what kind of context to put that in terms of, this video or this episode. There didn't seem to be some kind of pressing issue or something like that I could really, wrap this around, sort of overarching change to the way things are going. So now that there has been such a change, I want to start off by just kind of giving a brief overview of what these two people were discussing, and then get into kind of my thoughts on what was said and what's actually changing and what we're seeing now that's relevant to the discussion they were having. So the discussion they were having was about the way the bailout occurred back in 2008, 2009, recession, financial crisis. And the host was sort of defending the way that the federal government handled things, and the person calling in was complaining that that things could have been done differently, that there wasn't a quote unquote Main Street bailout, there wasn't help for the little guy. And a couple of points that struck me there was that the caller, the guy calling in, I think he has a very rosy view of the way China operates. I don't trust any Chinese economic data. There's no reason to believe it's more real than anything coming out of North Korea or the Soviet Union back in the day. There is no reason to believe any information that those people give you, because the Chinese Communist Party is an oppressive, evil regime. So that aspect of it I thought was kind of silly, because he's praising the Chinese Communist Party and saying, oh, see, the way they do things, they came out of the recession so much better than everyone else. And it's like, yeah, well, you don't know that. We don't know what the conditions are like there, because their data is just not believable. So there's that. And then the second thing, they were having a discussion about this bailout stuff. And the host is saying, like, the reason that the bailout went to these large companies is because only these large financial institutions can turn around these large quantities of money in a short period of time with the Federal Reserve. So the Federal Reserve, provides this loan backstop, right? They're the lender of last resort. Only these large financial institutions are equipped to work with the Fed. So I think there's an element of truth there, because there is a risk component. The Federal Reserve is technically a private entity. It's owned by its member banks. And, at least until about a month ago. I'll get into that in a second. But the Federal Reserve is a banking entity. It is not a central bank, right? The U.S. does not have a central bank like other countries do. And so the fact that it's a private lending entity, it has to worry about risk, or it has to worry more about risk than a central bank would necessarily. I think it's interesting to point out that at the time that this bailout stuff was only maybe relevant to these larger institutions, because they were able to sort of move around large amounts of money in short periods of time. And so I think, the host was probably correct about that to an extent, but there's nothing saying that has to be the way it is. And with the current CCP virus issue that we're dealing with now, we're actually seeing that be sort of manifest in reality. And I just want to provide a few comments about what has happened in the last few weeks here with the legislation and the way President Trump has sort of treated the relationship between the Treasury, the U.S. Treasury, and the Federal Reserve, and is really extraordinary. And so keep in mind too that this is not my area of specialization, and so I'm probably going to miss some details or some other interesting tidbits. But I want to at least give an overview of kind of the way I see what has happened here and the implications for it. And so in general, I think what has happened is that we have made a large move toward actually having a central bank in the United States. The Federal Reserve's role has always been to facilitate liquidity for banks, so to facilitate money transfers between these large banks, and to serve as what we call a lender of last resort. And so if a bank gets into liquidity trouble, they get into financial trouble, then the Federal Reserve is there to sort of help them out. Now, it's not that they don't pay a price for that. I mean, on the market, they certainly don't, just like anybody, any business that, needs some kind of assistance, that would affect their stock price and stuff like that. And so there was always a price paid for that. But the fact is the Federal Reserve was there to try to facilitate, liquidity and transfers between these banks, and to sort of serve as someone, as this backstop for these large institutions. And it was never intended, and it was never made to do what a lot of the populist types, and I would count myself among that group, really wanted them to do, which is to serve more as a central bank where they are actually providing liquidity to other types of companies like state governments, municipal governments, small businesses, medium-sized businesses, etc. But what we're seeing with the recent and over the last month or so, and this is being recorded on April 8th, we're seeing the Federal Reserve sort of tie itself to the Treasury and essentially become a central bank. So the reason for this is so that they can provide some of the lending that the recent legislation to deal with the CCP virus has provided, which is to to provide all these loans, and the Fed has a facilitating role in that, and to these loans to small businesses, medium-sized businesses, and to state and municipal governments, and it's such an interesting kind of thing because you're seeing this move from a very risk-based perspective, right? So, central banks, the Federal Reserve, was until 2008, the Federal Reserve was essentially trading in government treasury bonds and a lot of times in very, very short-term securities, like 30 days and stuff like that. But then when they started buying mortgage-backed securities, which is a whole other, this is where we talk about bundling. You take a bunch of mortgages and you bundle them up, and then you split them into risk tranches, and you sell securities based on those mortgages, right? So people make their mortgage payments, and that provides a cash flow, and then that cash flow gets put into this security, which is kind of like a bond, and it pays out as a cash flow for whoever bought that loan or that loan tranche. And so, the Federal Reserve got into that market for a while. So, that was kind of an interesting shift all by itself, just into these mortgage-backed securities that weren't just government securities, right? So that was a big shift in their risk profile. But what I think we're going to see with this is we're actually going to see them moving into, state and local governments and into smaller businesses, and in which, those securities, those loans are going to have a lot higher risk potentially than these mortgage-backed securities did, or certainly than federal government treasuries do. And so to me, this is a move towards a central bank perspective. Now, that doesn't mean that central banks don't have any kind of, they're not concerned about risk at all. Of course they are. And the Bank for International Settlements certainly has guidelines for, the way central banks operate. But it is certainly a shift towards the central bank model, where, our Federal Reserve is more and more of a government entity. And so just to get into some of the specifics of what's been going on here and what we're going to see, and always in reference, I think, to the 2008, 2009 recession and financial crisis, because that was the last time when we had this big shift, and now the shift is moving even farther. And so at the time, in 2008, 2009, what we saw was, there was the $787 billion, TARP bailout, that went to, a lot of these large companies like GM and stuff like that. But a lot of this was, a lot of the help supposedly was lower interest rates, right? And what we saw is that those low interest rates did not result in consumer price inflation, but they did result in asset inflation, right? We basically got, what a lot of the perma bears call the everything bubble, right? Where these low rates for such a long period of time just inflated asset markets big time. And so what we discovered was that, the Federal Reserve just, sort of cranking out liquidity, the old school models would have said that would have resulted in massive price inflation, but we didn't get it. In fact, we've had very little price inflation over that time period. But what it did was that liquidity went into the asset markets, and those low interest rates drove up asset prices. And so, what we actually see now is so thinking from like an inequality perspective, that this kind of model of just pushing rates down and providing liquidity to large banks and large financial institutions facilitates an exacerbation of inequality. And so we get, because the low rate thing helps you more the larger your asset base is. So the little guy doesn't necessarily get helped out as much. I mean, yeah, okay, your retirement portfolio and your pension and stuff, and yeah, that's important. But when you're talking about somebody who's, a billionaire or, 100 millionaire and has lots of money and assets, that those zero interest rates or those very low interest rates help them a lot more than they help, the average working person, right? The average white collar or blue collar person. And so what we're seeing, I think, is another shift, and this shift is actually going from a Wall Street based bailout. And of course they're going to get this bailout too, right? We're going to get low rates. We're going to get, liquidity facilitation for large banks. All that stuff's going to happen too. I think right now, I don't think that's set in stone, but there is going to be that bailout for those guys. But this time, I think what's different is we are getting the bailout for the average person as well. I mean, obviously, we're getting the Trump bucks checks, which are supposed to roll out sometime in the next week or week and a half, according to Larry Kudlow. And so that sort of, of course, that's also being facilitated to an extent by the Fed. Because again, the Fed and the Treasury are now being tied together almost completely, right? Secretary Mnuchin, Secretary of the Treasury, has a lot more influence at the Fed than previous Treasury secretaries have. And so the question is, I think, is why are we seeing this? Why is this happening this time? And I think what is happening, I think it's two things. I think it's number one, the corporate Dems have been pushed into a corner by the Bernie AOC wing of their party, the Democratic Socialist crowd, as they call themselves, has pushed Pelosi and the rest of the corporate Dems into this perspective that they have to worry about the little guy. They can't just be concerned about their donors and stuff like that. The Wall Street types and the large firms. So there's that part. And then the other thing is that we've also seen, obviously, the Trump movement, Brexit, sort of worldwide, or at least Western populism on the rise, on the right as well. And so it's sort of like, there's this realization that you have to worry about the corporate side, right? And Trump has talked about this, right? It's like, Boeing and GM, they employ thousands and thousands of people, right? So, obviously you can't, what are you going to do? Just completely dismantle these companies and then put everybody that works there on the dole? Well, that doesn't work, right? These people are, they're not paying enough, or, you can have some criticism of them, but they are providing jobs. And so it's not that and again, the CCP virus is not their fault, right? This isn't like the 2008, bailout where, you can put some kind of blame on these companies. So it's a little different in that scenario too. But what I think you're seeing on Trump's side is he's recognizing that you got to help the big guys, because the big guys employ a lot of people. But you've also, because he has his populist leanings, you've also got to provide something for the little guy too. And so it's really interesting, I think, to see all of this stuff kind of come together. And this is a big shift. And I don't really want to try to forecast, what's going to happen here as far as, with this new regime for our Federal Reserve being tied so much more closely to the Treasury, like a central bank would be, much more officially operated by the government and not so much privately. And there's always been a tie, right? The president always appoints the chair of the Federal Reserve and stuff like that. So it's always been this kind of, weird corporate federal government partnership kind of thing. But certainly an interesting development. And I think, in a way, potentially a good thing from a sort of, populist standpoint, and potentially from a Catholic social teaching standpoint too. I think certainly it's good that we're seeing, given the necessity of this type of extraordinary action. It's certainly a good thing that some of that money is going to go to state municipal governments and to smaller businesses and stuff like that. So I want to thank you for listening. And if you want to support the show, just download the show on your favorite podcast app, because I've got an ad that rolls through there, and that counts if you listen on a podcast platform. Otherwise, I really enjoy your feedback and your comments and your requests for episodes. I've got a couple more I got to get through, but I always welcome those. So please leave them on YouTube comments, or leave me an audio message on Anchor, or hit me up on Twitter or Facebook at Trad Dads on Twitter, or on the Facebook page. So I appreciate it. Have a good one.
Thanks for listening to the Trad Dads podcast. If you enjoyed our show, please subscribe on your favorite podcast app and consider giving us a 5-star rating on iTunes. It really helps us out.